Bienvenue tous, you're watching France 24 live from Paris. This is Business Morning. Let's start as ever with a look at the world's business headlines. In the red again, world stock markets took another dive yesterday on renewed fears about the US economy. The French business daily La Tribune explains the slump was triggered by a surprise contraction in the giant US service sector, whose January results fell to their lowest since October 2001. Japanese stocks followed the move today, but the Wall Street Journal reports the country can relax a bit thanks to its new trade strategy. In an economy which relies a lot on its exports, Japanese manufacturers have reacted quickly to the US slowdown by tapping into China. If Japan does go into recession, it will be because of serious economic weakness rather than export dependency. The 5,000 job cuts announced by British oil giant BP makes the front page of the Financial Times. Europe's second biggest oil company justified the move by a 22% fall in its annual profits. BP said refining and marketing operations were largely to blame, yet the company decided to raise its fourth quarter dividend to reflect its positive outlook on the future. Now then, in the United States, the race for the White House has reached a crucial juncture with what they call Super Tuesday primaries and caucuses in more than 20 states. A majority of voters cite the economy as foremost among their concerns, well ahead of the war in Iraq, for instance. But the candidates offer very differing prescriptions for fighting recession. More on this now as our business editor, Douglas Herbert. Doug, let's begin with the Democrats. What's their remedy?
Well, basically, Mark, Democrats would take the Bush economic playbook, put it in the shredder, and leave it there. But seriously, what they're looking at, they really want to reverse the economic rules of the last 8 years, the way business has been done. They fighting poverty in the U.S., and there are millions and millions, especially children in poverty, is a central plank in their platform. And the major target of their economic programs, whether we're talking Hillary Clinton or Barack Obama, is to undo the Bush tax cuts. These were $1.3 trillion of tax cuts, which Bush passed early in his first term. And they contend that these tax cuts were aimed predominantly at the very wealthiest Americans. What they want to do is undo these tax cuts, which are due to expire in the next couple of years, I think 2010, and instead keep them in place for more middle-class, modest, and lower-income Americans.
I mean, it's not a surprise when taxes are cut. It's always the rich who get richer and the poor who, well, maybe make a couple of crumbs out of it. What about this stimulus package? Has that impressed any of the candidates?
Well, as you could say, we're still seeing this, being bandied about in the U.S. Senate, and the sticking point there, once again, is everyone seems to agree, yes, you need what are called tax rebates. All the candidates think they want to give $250 checks, basically, to lower and middle-income families. They're rebate checks. And Hillary Clinton's program would be about $110 billion worth of rebates. Obama's a little less, about $75 billion. It's a lot of money nonetheless. But they also really want to help out states that are in need of aid, and they want to help out with unemployment benefits. Many Americans out of work.
Well, obviously, states struck by storm damage today. Let's hope that they're not too badly damaged and people aren't too badly put out there.
I just want to give a nod to the Republican platform as well. The Republicans actually say that the Democrats are going to cause economic havoc if they put an end to the Bush tax cuts, which they say have actually helped spur economic growth. They do want to mitigate them, though, and they are obviously in favor of the rebates that we've seen. And they all do want some sort of reform of the healthcare system, some form of universal healthcare coverage. Their approach does vary on that, however.
Thank you, Douglas Herbert, our business editor, a native New Yorker, no less as well. Romney, the one guy who says he's an economic expert, is doing the worst, which is quite interesting, isn't it? Anyway, more on that another time. Now, we have to move on. US stocks end sharply lower on Tuesday. That's what it says in front of me. The services sector plummeting at its lowest since 2001. It's yet another sign of a recession, causing a market sell-off.
They celebrate their Super Bowl win, but it's the only thing they'll be happy about on Wall Street. At the New York Stock Exchange, investors fear a recession. US stocks suffered their biggest drop in nearly a year. The trigger this time, a massive plunge in the services sector. From retailing to the airline industry, the key index on non-manufacturing activity plummeted to 41.9% in January, compared to 54.4% last month. That's its lowest since the last recession in 2001.
Most people had expected the number to be lower, but few had expected it to dip below 50 and be in recessionary territory. I think it's causing investors to have to reassess how deep this potential recession might be.
It could be growing evidence that the housing slump and the credit crunch have affected the rest of the economy. There's a global slowdown with only 0.6% growth in the last quarter, and if the economy continues to shrink, a recession will occur. To avoid it, Congress is debating an economic stimulus plan that would pump around $150 billion into the economy. Meanwhile, experts say there's a strong chance that the US Federal Reserve will slash interest rates further, perhaps as much as 0.5% before its next meeting on March 18th.
Now, moving on. Ukraine has won permission to join the World Trade Organization after a 15-year battle to speed economic growth, improve living standards and set up a free trade area within the European Union. The agreement was signed by WTO chief Pascal Lamy and Ukrainian President Viktor Yushchenko in Geneva on Tuesday. Now then, let's get our regular dose of business from Beijing. Our correspondent there, Henry Morton, is awaiting us today. We're going to start with the Japanese car maker Toyota, which announced good results overall for 2007. Foot down on the accelerator, Henry.
Yes, Toyota's profits rising 7.5% in the last 3 months of 2007. Their slowest in 4 quarters, although in line with analyst expectations. The company's fuel-efficient vehicles attracting customers in the EU, US and Asia. Third quarter net income totaled $4.3 billion as the world's second largest car maker saw sales rise 9.2%. Expansion in Russia, China and other emerging markets fueling Toyota's growth and offsetting slowing US demand and a drop in domestic sales. Now moving to China, where the country's largest international carrier, Air China, plans to borrow $750 million this month to expand its fleet as travel demand continues to grow in the world's second largest aviation market. The airline is looking to add 24 planes this year, which will come from earlier government orders to Airbus and Boeing. Air China is just one of several airlines expanding their fleets as the country's economic boom makes flying more affordable. Air passenger numbers jumped 16% in 2007 and are expected to jump another 14% this year. We stay in China, and Datong Coal Industry is set to buy majority stakes in 2 Chinese mines for $95 million in order to expand output and further profit from record coal prices. China struggled to meet demand for coal, which is used to provide around 3/4 of the country's electricity, has helped push coal prices through the $100 a metric ton mark for the very first time. Those are the stories making the business news here in Asia today. I'll see you again at the same time tomorrow.
Cheers, Henry. Kung Hei Fat Choi, that's Chinese for Happy New Year. More on that, of course, another time. So before we close this edition, a quick reminder of the figures on the world's stock markets. US stocks into a tailspin yesterday amid disappointing results in the service sector, as we were talking about earlier. And in Tokyo, following the move, the Nikkei losing. Well, there you go. They're the latest figures for you to consider. So, you're watching France 24. This has been Business Morning. Thank you for watching. Stay with us.